I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, natural resource specialist at the Oxford Club. His website, investmentu.com. Welcome to the show.
Thanks for having me on.
American politics, how much of a role does the presidential race play in the markets, especially in the last few months leading up to the November vote?
Well, investors hate uncertainty, right? And so they would rather know what policies will be in place. So actually, I think that is something that will happen. We'll have pressure on prices going into the November elections. Maybe not now. We've seen stocks hit new highs recently, but I think that pressure will come into play, unless it appears that one or the other is really going to run away with it. If that's the case, people will start adjusting toward whatever policies they think will be in place, and so we'll just see things move along from there. But if it's a horse race going into the election, then we will see money sitting on the sidelines because people aren't really sure how to invest, and they want to see how things end up at the ballot box before they actually commit that money.
Do people tend to go to safe havens and waiting for this vote to happen?
Or they just sit in cash. I don't think anyone's going to buy gold just because they're unsure about the election. That said, if Trump wins, I think gold is a great investment. I actually wrote a story about this recently for investmentu.com, where if gold wins, and I think there are good reasons why, if Trump wins, and I think there are good reasons why Trump could win. And this is not to say that I am actually supporting one side or the other in the election. I think there are two bad choices. Make the best of it. But if Trump wins, then we could see like what we had in the Brexit, which is that it really surprised the market, really shocked investors, and so when that kind of thing happens, then you can see precious metals get a real safety bid. So that's the kind of thing we could happen. Also, Trump said that we should handle U.S. debt the way that he handled debt when he was in business. And he didn't really elaborate any more than that, but one thing he did in business was go bankrupt. So that might also worry the market, whether he was talking along those lines or else if the market's just reading more into it than there really is. But I do expect that we'll see a surge in gold if Trump is elected in November.
Could a U.S. government actually default just like a private company going into bankruptcy?
Well, countries can default, but the U.S. will not. The U.S. just prints more money. So that isn't actually quite the same thing at all, really. I mean, so I'm not really worried about it. So I don't think we'll see a U.S. default in as a result of this election. Further on down the road, we could see different things happen. One thing that could happen is if other countries around the world stop using the U.S. dollar as a reserve currency. I think that some of them, China and Russia, for example, resent the way that the U.S. uses its currency as a bludgeon to just hammer other countries when it's mad at them. China has its own reasons because it has a long history of being invaded, so it's naturally xenophobic, whereas Russia just recently, we had problems with them over their incursion into Crimea and the Ukraine, and so we put economic sanctions on them, and so Russia is quite upset about that, and so Russia and China are two countries that are really buying a lot of gold right now because they resent the strength of the U.S. dollar, and I think they would like to establish independence from it. How that would work out, I don't know, but I do think that's a longer-term thing that we'll eventually have to address.
Is that why China and Russia have been buying gold like crazy the last 5 years?
That's part of it. I mean, they have multiple reasons that are converging. You know, one, Russia wants to really support its own currency, and if it has an economic crisis, and it had one not too long ago, if it has another economic crisis, it wants to be able to say, well, we have all this gold in the bank. China, on the other hand, is hemorrhaging money. I mean, just an insane amount. I think there was $675 billion fled that country last year. This year, more fled in this first quarter than last first quarter. So that number, which is titanic, could just be a signpost on the road to ruin. If you have, you know, billions and billions of dollars fleeing your country, it's hard to run an economy. And there's many ways to get money out of that country. And, of course, you people up in Canada know what they do with that money when they have it out. They go to Canada and they buy real estate. They go to the west coast of America, they buy real estate. And they also buy gold. But I think that China's trying to right its ship, trying to give itself an economic foundation to, restart growth. It has slow growth. It needs faster growth. So I should say jumpstart rather than restart. And to try and get some kind of economic growth so it can grow its way out of the tremendous pile of debts that it has racked up on like all sorts of levels, whether it's the consumer level, corporate level, and also local or government level. There's just a tremendous amount of debt there. I think China has something like 250% to GDP of debt, which is insane. So it needs a solid economic foundation. And one way to do that is to have more and more gold reserves. Also, China really didn't have a lot to start with anyway. So it was kind of playing catch up. So I think that just to sum things up, I think Chinese buying of gold is a long-term thing, and we'll just see them doing it more and more and more. And so that's certainly something to keep your eye on. Russia is really worried about how it'll handle another economic crisis if it has one. It feels that the U.S. is out to get it. It may or may not be right. And so one of the really weapons in its arsenal is to have more gold reserves. And so that's why Russia's picking up more gold.
Russia and the Middle East now are pumping out record amounts of oil. How's that going to affect the price?
Well, yeah, the rebound in oil saved Russia's bacon, I have to say, and helped its currency and helped things like that. So that's the good news. The bad news is that we seem to have hit a short-term top in oil. In fact, we recently saw Libya shut off the flow of oil from one of its ports due to some tribal, kind of battle or fight or else whatever's going on there. And the price of oil did not jump at all. That kind of tells me that it's a market that's well supplied, at least in the short term. So I expect the U.S. price of oil, which is different from, the international benchmarks, and it depends on which one you look at, but I expect the U.S. price of oil to go down and maybe dip its toes in the $40 range. And then, so if it does that, then we can look at that as new support. And really that's a problem on so many levels, because back when the oil boom was going on, so many energy companies were just, racking up all these debts. And at current oil prices, they just can't service them. Even if oil is over $40, it's, the U.S. price of oil as we talk is currently around 45. Even if it's at 45, so many of these energy companies just can't make it. In fact, we've had 90 large bankruptcies globally so far this year, and I think that's the highest since 2009. That was during the washout from the 2008 financial crisis. We don't have a financial crisis now, or at least one that the powers that be are willing to admit to. So we're really seeing problems in the energy space because of that. Now, at the end, when enough companies are washed out and assets and the assets have been redistributed to those companies that can really make it, then we're in a much stronger space. Then we'll start to see things move along. But we're all still in the grip of the Saudis, who are playing chicken with everyone else. The Saudis are bound and determined to prove they can outproduce pretty much anyone else at a lower cost of oil. And the Russians are willing to take them on because the Russians believe they can play that game as well, too. So we're seeing plenty of oil on the market. That's not good for U.S. oil companies. I wish the news was different, believe me. But that's just something we'll have to deal with. That said, there's a certain kind of oil company, Exxon, for example, that are riding higher with the stock market rally. And so Exxon, which is one of our recommended positions in Oxford Resource Explorer, is doing extremely well despite the recent decline in the price of oil, because it's a company that has, it's easy for them to actually get loans. They have plenty of cash anyway. They have wonderful projects, and so they can do extraordinarily well. So the best of the best oil companies should continue to do well in this environment. It's the ones on the margins, especially the ones with heavy debt, that are in serious trouble. And you might be picking those up on the super cheap thinking, well, you know what? It's only a few bucks. Maybe it'll work out. But if oil prices take another big dip again, and I'm not saying they will, but they could, and if oil prices do that, then we could see a bunch of those companies just fold their cards. And so don't get caught on the wrong side of that.
We'll have more with Sean Brodrick right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Sean Brodrick. I know lithium gets a lot of chat for the battery business, but how about lowly zinc? How is that doing?
Zinc is doing very well. In fact, most people know silver is the best performing commodity so far this year. The second one isn't gold. The second one is zinc. Now, there hasn't been enough production of zinc from mines to meet demand for a few years now, but what's been happening is that, somewhat mysteriously, new stockpiles come onto the market just as prices start to rally and things get hammered lower. That's not happening this time. This time we've seen an extraordinary rally in zinc. Maybe those secret stockpiles of zinc are used up. I'm not sure exactly. Or else maybe we're seeing enough industrial activity to absorb it. There is the fact that big mines shut down last year. That has to help the supply demand situation. So if companies are invested in zinc, and by that I mean they have good working mines and stuff like that, well, they can probably do well in this environment. They can actually do very well because zinc is really going to be heading higher for the rest of this year, I believe.
Now, something that might make your electric car a little less attractive if you're an eco buff. Apparently, the flamingos in Chile are threatened because they're draining the salt flats to get the lithium out of it.
Oh, really? Well, yeah, one of the interesting things about that is, lithium is rare, but it's not that rare. It's just that really no one put in the work to actually develop these deposits. And since you bring up electric cars, let me bring up something else. You know that rare earths go into those electric motors as well. Two of them specifically from China, and China loves to play games of like supply demand. Oh, here's some for you. Oh no, we don't have any. So Honda, which is a Japanese company and therefore on the wrong side of Chinese for a whole bunch of reasons, when they roll out their next generation van with an electric motor, which should be very soon, it'll still use some rare earths, but it's not going to use those two from China because they've found a way around it. So if you keep things rare enough long enough, somebody will always come up with some sort of a substitute for it. That said, gosh, one of my friends used to have this job where, like, once a month he would fly to China and see what kind of substitute they'd come up for parts made out of copper. They were usually using aluminum, and almost all the time it didn't work, because at that time copper was expensive, aluminum wasn't, and so they were just trying to replace it. So I'm not saying that lithium will be replaced anytime soon. It's just that I'm not really worried about this small thing down in Argentina or stuff. Really, the big market for lithium is ahead. We are seeing tremendous demand for electric cars, despite cheap prices for like gasoline, which is caused by there are more refineries around the world spitting out gasoline now than you can shake a stick at. And so that's kind of flooding the market rather terribly. And so even though there's cheap gasoline, there is strong demand for electric cars and also hybrid cars. And so lithium, I think, is really going to have a really good year.
What about the fact, too, that for these electric cars, they never talk about it in the ads, of course, but every 10 years you have to replace those batteries.
Yeah, well, most people don't hang on to their cars for 10 years anyway. Now, I'm one of those few people that does. So maybe an electric car wouldn't work for me. But, most people trade them in every few years. I don't think that'll hurt the car sales very much. And if you get, say, an incentive from the government to purchase an electric car, you certainly don't get that all the time now. Those are really going away. That just gives you extra incentive to really do it. And some people like to think they're, saving the earth, but I think most of it comes down to cost. If it works for people financially, then it's something they are going to do. So it seems to be working for more and more people financially, and so we should see more of that happening.
Now, I've also noticed that copper has bounced back once again this year at $2.26 a pound. Are you surprised that copper has remained strong?
Yes, I am, because we keep hearing weakness out of China, and we also hear that copper supply and demand is in balance. So the fact that prices have come back so well, maybe it was, some people were bearish and they closed out those positions, and that took a weight off the market, but it still seems to keep going higher. I think one thing we have to look at is that, A, there could be more demand than we realize, but also the central banks are opening fire hoses of money because they are trying to get their economies going. In fact, Eurozone GDP is supposed to shrink to 0.3% in the second quarter. That's like so low, it's just not worth it. So to counter that, the central banks just open up the fire hose of money, hand out all this money to banks, which they're supposed to put to work building up the economic infrastructure and machinery and stuff like that, but they don't. Instead, what they do is they take that money and they play it in the markets, whether they're buying stocks, which is why stocks are hitting new all-time highs, or whether they are investing in, say, harder commodities like copper. Maybe that's part of what is pushing up the price of copper, is we are really seeing some of that excess cash that's sloshing around the global financial system slosh into copper, into zinc, even though zinc has really good fundamentals right now. Maybe part of it is its excess cash. Probably also into gold and silver, too. The thing is, I don't see this trend changing anytime soon. I think this is a trend that's probably going to accelerate, so that would mean higher prices down the road for all sorts of things.
What should a person be looking at for investments to take advantage of that?
Well, Right now, we seem to have hit a short-term top in the gold miners, silver miners, as a group. Some still going higher, but as a group, they're kind of flattening out, going back lower. They have to digest their gains, right? Well, if you missed the first leg, one thing you might want to do is make your picks for the next leg higher. You can wait until there's a breakout and then just pick them up. Or else, if you want to take a position now because you have an eye on the longer term, then that's what I would do. There are some great copper and silver miners in Canada. Hey, there's a great zinc miner in Canada, which is Teck, of course. They produce, 31% of the world's zinc? And along with other metals as well. So I think that I would look at the miners. I think that they'll continue to do extraordinarily well, or at least the best miners will. And so the fact that we finally have a pullback lets you collect your breath, right? Not panic, but just calm down and look at things with a even keel and say, this is what I want to buy. The next thing's head higher. Make your list. And that's what I think people should be doing. You can pick them up now. You can wait for the breakout. But it looks, at least in some of the stocks I watch, we're seeing bull flags that are probably forming. We won't know until these patterns, finally materialize, until we finally see the breakout. But if these are bull flags, then they've only run up halfway, because that's the thing about flags, is they fly at half-mast, right? So that means you can pick up some of these things and do very well. When that flag runs up the rest of the flagpole, you can be in fine shape indeed.
Sean, thank you so much for chatting with us.
Thank you. It's always a pleasure.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.